this magical Friday, and what a day it has been, what 24 hours can do. You got to pinch yourself because the screen was just magical. It was really breathtaking what the finance minister's announcement can do to equity markets, and I think today was really an example of that. I really don't know where to begin because honestly, looking at the screen today, what a steroid shot.
So steroid shot, it's a reboot movement. It's a day where the sentiment, the view, the opinion, the belief and the commitment level would change. So it's like saying somebody has really has pressed the reset button. 11 o'clock today versus 3:30 today, what has changed? Well, everything has changed.
Just about everything. Look at the screen and look at the kind of move that you've seen on the Nifty. The biggest single intraday gain in the last decade. Similar is the case with each and every sectoral index that I pick out. The Nifty Bank, it's a 5-year intraday gain that you see. And just very quickly, like we're calling it, D Street was clearly on steroid shots today. The Nifty and Sensex both have posted their biggest ever percentage rally intraday. Like I said, it's a decade high for the Nifty. We're back at 11,350 levels, back at 38,000 for the Sensex as well. Let's have some of the other graphics going and get you a sense of what the internals were looking like. The Nifty mid-cap has managed to post its best day again in over a decade. These are magical moments, once in a lifetime events, Nikunj, that you see. And I think the last time these kind of reforms were back in what, 90s? When at least I wasn't tracking the equity markets.
No, 1991, that's what the old-timers, they're telling me, that both in terms of the motive, the purpose, the objectivity, and also the entire desire to really fix something, I won't say they've taken a risk, but there's acknowledgement and there is action. Now, the view in the market in the morning was that the government was running out of ideas, and if they had bad ideas, but this just tells you that government is cognizant of the fact that there is a slowdown. They need to do something out of box in order to revive the economy. So from a market standpoint, it's sentiment, it is P multiple, it is belief, and also relief. I don't want to get into what bears must be thinking today, but for the bulls, it's like one of those days you get up and you've got the perfect symphony, a magical orchestra, like a fairy tale, everything is coming together.
Yeah, indeed it is. All sectors were all guns blazing really, starting off from automobiles, banks, infrastructure, real estate, NBFCs, the entire financial cluster, beaten down auto names, they were all holding up. And I don't even want to get into individual names because the list is endless when it comes to the gainers. Just a handful of losers today, and that was IT, but again, that's a different story. Short covering and how. Just look at the kind of moves that you saw on some of the individual counters. Nifty Auto has managed to post its second best day in history. Eicher Motors has jumped up the most in about 9 years. Hero MotoCorp, the jump has been maximum in again 9 years. Similar has been the case with an IndusInd Bank, which again has seen a decade high jump. You've also got SBI, which has gained the maximum in about 2 years. Bajaj Finance, again a double-digit run there. The biggest up move that it has seen in its 11-year history, and Ultratech Cement as well has jumped the maximum in 10 years. So historic in every which way, and let's to join in to the party and celebrate with us, Balasubramanian, CEO at Aditya Birla Mutual Fund, joins into the show right now. Bala, what a magical day today. Has left you really breathless with the kind of price action that the market has screened. Do you think it is now a re-rating moment, Bala, for Indian equity markets after what the finance minister has announced today?
Yeah, I think it definitely is a completely different day. Nobody was, first of all, prepared for such an announcement from Nirmala Sitharaman as finance minister, and so one definitely came as a surprise. And second is nobody would have thought that the government will soon take such a bold call to cut the tax rates and making it close to about 28% for existing tax-paying companies. On those companies, it's a sort of new out-of-the-box idea which everybody is thinking actually what kind of idea they will generate to invite investment. Then creating a special provision for companies who are setting up a manufacturing business unit and make the tax rate actually lower than the tax that is applicable for existing companies. These are quite innovative ideas which came, and completely nobody was prepared, and therefore it came as a big surprise. I also assume the last 6 to 8 months of negativism, where disbelief, and there was a lot of questions about whether the government, as Nikunj mentioned just now, about whether they have many ideas actually to implement, I think they have actually proved everyone wrong, and most of the time in the last 6 months, which I have noticed, and most of the people had built so much of pessimism, and the short position that got built in the market was also pretty high. Therefore, it caught everyone off guarded. One of announcements are pretty good, and the last 10 years, I don't think such announcements would have come ever in the budget. This, I call it as a 3 to 5 times higher than what would have made in the budget as the provisions. That's something that came as a big positive. And second is people are not prepared for such kind of announcement. They have continued to build their short positions. Therefore, it caught actually all the short sellers actually under surprise. Therefore, it leaving actually more scope for the market to go up from here on, because now is actually building back the confidence.
Fair point. So, in the two words which in my book, I think they have got, you need to revisit them. First, expectations were low, and B, the dependence or the belief on government action was not there. Now, since expectations were low, this booster shot has really taken the markets higher, and since expectations were low, I guess there has been a big reset when it comes to government commitment. So what are market really excited about, Aisha? I think this is the story. India's tax rate now, effective tax rate now comes down to 25%. If you're
That's only at par with China, actually.
Exactly.
Yeah.
We are in a regime where the world has been bringing down taxes because you want to protect your own industry. In a tariff war, you want to make your home industry more tax competitive. And India was losing out to the Chinas, to the Russias, and to the Vietnams of the world because you had a high tax rate. B, lower tax rate means more cash flow. More cash flow means there will be more money to spend, and that automatically will take your P multiples higher for the economy and also for the market. But apart from just looking at what happened to the market, I think it's structurally what changes. Again, focus on it. Singapore, people migrate because taxes are low. India, taxes were high. They come down to 25%, and for fresh investment, it's like Atiti Devo Bhava, because for the fresh investment now, the tax rate is actually less than 20%.
I recall that there was a quote coming in that India would actually be compelled to bring down their corporate rates when it did not really happen in the budget, and there was expectation that maybe corporate rates would be lower. And I remember that Richard Sharma also said that India will be compelled to bring down their rates because otherwise it's going to be a flight of fancy towards markets like a US, Germany, or some of the other European markets, or for that matter even Russia.
Yeah, that happens, Aisha, because if the tax rates are not very effective, you don't have edge in terms of competition. India as it is has very high interest rates. The ease of doing business is a function of A, interest rates, policy, and C, also tax rates. On all the counts we were not high. So I guess at least on one count now we are really at an advantage now with other global markets. I also want to showcase what else we got from Vallabh Bensali and other marquee investors in terms of how they have really reacted to today's government action. Bala, while we'll showcase to our viewers what exactly Vallabh Bensali had to say and other marquee investors had to say, do you think today's market reaction is good and great, but we should not get carried away simply because oil is on a boil, and whatever will happen to the economy, it will not happen tomorrow morning. It is not Jack and the Beanstalks that economy and spending will start picking up automatically.
I think, Nikunj, I think the government has done a very smart thing by being aggressive in giving whatever is being given as a suggestion by various market pundits and market experts. And therefore, they have surprised everyone, including the people who would have probably worked with the government very closely but do not expected such things will come. Therefore, actually shift the onus on people both in the corporate as well as the individual level to focus on the next steps as to how one should actually make this benefit which the stock price is giving today, and most in sentiment is coming in the form of reaching out to the people at large and increase the investments, or maybe increase the consumption, whichever way actually that works out. Therefore, it increases the onus on people. Therefore, changing the sentiment both towards creating employment as well as making some plan for new investments. I think now they will be the onus of the corporates. That's why I think they are shifting the gear from, okay, now we are expecting so much from the government so far, we are now giving it, probably will give more. Maybe we would also expect equally a similar reaction coming from the corporate world at large. And probably you could also expect as we move forward, confidence will start getting built up, because this year so far the good monsoon has been there. Therefore, naturally one should expect the second crop should be better. Therefore, the government will have some more leeway to boost the consumption, the rural economy, the form of increasing the MSP prices. If they are able to do that, then actually it can lead to reasonably a good pickup to come in as we move forward, not for 1 day or 2 days, maybe for next 3-4 quarters to come.
Yeah, absolutely, and most of the market participants, and mind you, the who's who of India Inc. has been speaking to us today, and from the market fraternity as well. This is exactly what they have been saying, that today is just a precursor, only a trailer. This is not the entire movie. What you saw today was only shots covering and really hiding for cover, and this market is going to definitely have more legs to run higher. In fact, I just want to walk you through some of the market commentary that we've been getting from our experts. Valim Bansali and Nikunj was chatting with him earlier in the day. He says that this is the biggest response from the government since 1991, and he says he's very confident that the economy and markets are going to come back all guns blazing. Also, we had N. Jayakumar from Prime Securities saying that the move to boost foreign money flow in the economy is a big thumbs up, and it's going to work out very well for the markets as well. Samir Arora, he was caught unaware after this government move because he was busy in the midst of a conference, but he says that we'll see about 10% benefit for full tax paying companies from this lower tax, and he also pretty enthused about the market reaction, and he says that this is just the starting of a big move in equity markets. And Atul Suri, when he was talking about the relevance of the Nifty actually cruising past that 11,200 mark, similar was the kind of opinion that you saw from other experts as well. Sunil Singhania saying that the overall market will now attract a lot of investments coming in. And Bala, that's exactly the point that I want to pick up with you as well. Portfolios were bleeding, and that selling had now trickled into the banking pack as well, and even some of the blue chip names up until today morning. What happens next? Does this market compel you to buy afresh now, Bala? And if so, what would you buy?
No, naturally, of course, even from money manager's point of view, there really is a dilemma that what the kind of cash one should keep, which sector where you go and hide yourself in a scenario where a lot of uncertainty is there. And that, I think, portfolio will get rebalanced once again, purely on the basis of this the sectors where people are extremely underweight is in auto sectors. Though, of course, stocks have gone up quite substantially today due to the short covering. Of course, people start now building up expectations that as we move forward, numbers will start coming back. Therefore, some bit of shift could happen towards the auto sectors. Even the banking and financial sectors in between, there was some kind of convergence coming on, high low of NPA, credit growth are not happening. And given the fact that the high liquidity in the system is coming, I think the high time, I think we should see the credit market to improve, that confidence to come back. Whatever said and done, there has been a complete fear factor in the lending market. I think it can't actually hold on for too long, especially when the interest rates are low, liquidity is better, and government is doing enough, and government also initiating towards building the loan growth, and they are doing a loan mail across the country. I think probably you will see the larger participant coming. These kind of things will actually boost the credit growth for the banking system. Therefore, we will probably see the interest coming back towards the banking financial sectors and other allied sectors related to the broad economy, which has been suffering, especially in the mid and small cap space for a very long time. It's got bitten very badly for the last 2-3 years. There will be many companies which are good profit-making companies.
No, Basant might should also join us. Basant, let's start with a big smile on your face. This is the biggest rally in the history of Indian capital markets. Let's make a smile even bigger. Okay.
Yeah, it's rubbed off on the Bala as well.
Okay. So Basant, today we are smiling, but if oil goes another 10%, there's no reason to smile then.
No, oil going up is one part, obviously, Nikunj, but then you have to look at the whole thing in context. The entire profitability of profit-making companies goes up on an average 11, 12% or 10%, whatever the numbers are. So if profitability goes up 10, 11%, and if Nifty is the correct barometer of reflecting corporate profitability, why shouldn't Nifty go up 10, 11%, which is 1100 points? So we already covered 500. I think 600, 700 is more to come. And then you add sentiments and this and that. I think the rally has started. It's going to get harder on Monday because today, I mean, if I'm a fund manager having a good sleep in New York, Manhattan, I will wait for my broker, for my research report writer to put up an update on what exactly happened in India at 11 a.m. IST. So once those guys get those reports on the desktop, I think they're going to come and then trade on Monday. So I've seen that it takes 1 or 2 days for events to actually translate themselves into meaningful action by the foreigners. And I think Monday again it should be a carry on, but then obviously it's back to basics and everything. But here the basics have improved by 10% across board. So I think it's great.
So let's talk about the good bit here now. Markets have reacted today, Basant. Economy will take some time to react. It could take 1 month, it could take 3 months, it could take 6 months. Which end of the economy, Basant, do you think will react now? Will it be the investment cycle? Will it be the consumption cycle? Will autos make a comeback? Will cement demand make a comeback? Because today was a rising tide, everything went higher. But eventually markets will start differentiating. There are some sectors where there is a disruption like autos and technology which may not make a comeback, and some sectors may also make a comeback at a powerful manner. What's your thesis, Basant?
Tax saving is for people who are paying taxes. So I don't think auto has got anything to do with it right now. We'll have to watch the next 3 months. I would like to hear a headline or see a headline which says Apple to put up a manufacturing facility somewhere in Bangalore or Delhi or wherever. Maybe IBM comes back into India with a bigger bang. You know, the time right now is to watch those headline spaces. If those headline comes through, I think Capex would see a recovery. But at the moment, I don't think it's really a Capex-led thing. I think at the moment it's across the board 10%. Let's get that 10% first, and then maybe we'll know which are the companies or the sectors which are going to run more than those 10, 15, 20 percentages.
You know, the retail participant and the portfolios there have bled, and they've bled for a long time now, especially if your portfolios were concentrated in the mid and small caps. What's the messaging and the takeaway for them? Because for them to even recover the past 1 year's losses is going to take a long time. What next for them?
First thing, I mean, if you've lost money and no recommendations, if you lost money in a Yes Bank or an RBL or a DHFL, there's no need for you to wait for a recovering that money from a DHFL and an RBL and a Yes Bank. Why I say this is not a recommendation on RBL or Yes Bank or anything. Why I say this is you have to move out into the performers. Like today, in spite of all this, Yes Bank was still down because nobody expects Yes Bank to make a profit, at least in the immediate term. So you have to get out and you have to move into the leaders. I mean, HDFC, the Bajaj finances, no recommendations again. So we own Bajaj, so I should have spoken about that. But anyway, so the bottom line is, at the moment, we are waiting to see what the foreigners are going to do, because if they start writing those big checks, they're going to do it in the top 50, top 100 names, maybe the consumer names, the financials. So for the moment, it's only an income tax related bull run in India. It's not a GDP's 8% bull run. It's not a corporate earnings growth bull run. It's just a tax adjustment bull run for now. But it's great if tax adjustment bull run can give us 10% on the Nifty, and then if sentiments improve, because the government wouldn't stop at this. I think there's a separate plan to privatize most of the government units and then use that money for the social welfare. So I think more is coming, more should come, because if you've gone so far ahead to reduce taxes to 25%, you would not stop at that.
You're getting greedy, Basant.
No, actually, what really changes now is that the belief of the market in government's ability, and also important willingness. See, ability and willingness are important as long as there is intent. And you may have willingness and intent, but you don't have the ability. So right now what they've demonstrated is that they have the intent, willingness and the ability. It's not easy to cut tax rates when you have to protect a fiscal deficit and when you know that world itself is slowing down. So when you've taken a bold step like this, it is a bold step because you have to protect your fiscal, you're taking a risk. The risk is that if you cut tax, buoyancy in the tax rate will come down, and corporate India, which has been making all kind of excuses, ye nahi hai, wo nahi hai, they will come out and they will recognize. See, with India, demand is not a problem. The cyclical slowdown will go away. It is only you need a benign tax structure and a stable interest rate regime. If they both come back, I don't see a reason why foreigners and corporate India, investors will not come back and start spending, because where in the world you'll get a 5% GDP growth with that kind of a population advantage.
And inflation under control. But Paula, just one question, because I remember 2017, and we used to also have regular chats about that. 2017 was lot about the DII participation. 2018 they left us, 2019 so did FIIs and FPIs. Now with this move, do you think the domestic investor is going to come back? The HNIs, the retail money, the ETFs, which have been completely aloof from the markets for the last 4-5 months at least.
Yeah, I think sure. I think as you rightly said, we have seen a great year for mutual fund inflows of last 2-3 years, and this year too is not that bad. I think industry had received net inflows in equity. The SIPs continues to run with an average ticket size of about 8,000 crores per month to the industry. I think this number can actually continue to pick up and can probably gain momentum. I think what is missing is the go out in the market and make a strong pitch on the economy, strong pitch on equity investing. What actually was something is missing for the last 4-5 months. Probably with this move, I think the more confidence coming back, that more announcements and more, I think, steps will be taken to drive the growth back. Probably we will see, I think the first which will start picking up is actually in SIP, will now start come back. Probably I would assume, I think from where we got stuck in the range of about 8,000 crores per month in SIP, can easily go to about 10,000 crores by end of the year, sorry. So that's the kind of momentum can pick up. Even the advisors or maybe investors can probably be able to gain confidence back, and that's where I think I would see that mutual fund growth could come back on the equity.
Look at companies where the effective tax rate will now come down, FMCG companies, banks, IT, some of the companies with the tax rate largely because of the base is so high. There you go. The tax rate earlier was 25, now 15 if you are starting a business after 1st of October. Effective tax rate 29 earlier, now will come down to 17, no MAT payable by such firms. But which are the firms where the effective tax rate has been north of 30 and where tax rate will come down substantially? Whole list of companies, and those names will just come up on your screen. Basant, since this is a cash flow stroke a tax-driven rally or a tax-driven market, can I safely say go and buy good banks, good private HFCs, good private IT firms, because that's where the tax adjustment would kick in?
Absolutely, without doubt, Nikunj. I mean, over the last 1 month, 2 months, we were almost at our wit's end as to whether the government wanted to do something or not. And you spoke about ability. This government has got the ability to do anything. If they could push 370 into Kashmir, I think they have the ability to do everything. And I think we are nearing that space where it's not just about income tax right now, something more could come. Even if nothing else comes, this is enough for the market to rally and for good companies especially to go up again. And most companies are down 20-30% from the all-time highs, and the ones which are growing. So I think if you don't invest right now, because most of us were not there in 1991 actively in the market participating, so maybe this is another moment for us to get in. So if you would really want to put in money on Monday. It might go down a little bit because after such a rally there is always a profit taking or whatever, but I think it should be okay.
Okay, gentlemen, great to have you both on the show with us today, and what a day really. Bala, Basant, both of you, thanks so much for taking the time out. All smiles, couldn't have asked for a better Friday. Till last Friday, Nikunj, we were cribbing that the finance minister comes every Friday or over the weekend and nothing happens. She's made it up.
She's made it up. Historically, when the big gains have happened in the market, they've happened because of political factors, government mandate, the belief on what will happen to the basic economic system. Today, I think it's action. It is not a view. Very rarely markets they get re-rated because of action, because earlier when markets have got re-rated in 2009 or 2014, that was largely because of a view which came after the change of political mandates.
True, absolutely. So yes, Josh continues to be high, and hope this momentum continues for a long time. It's a goodbye from Nikunj and me for now. We'll see you with all the market action on Monday morning. This market also makes you sometimes fumble and stumble because you're at a loss of words. Thank you so much for watching.